Video, I'm going to teach you how to trade market structure and identify liquidity in the most simple way possible to help you become a full-time profitable trader. Let's talk about how to master market structure and liquidity in the most simple way possible. This is really important because mastering market structure allows you to become a profitable trader. Before understanding market structure, you won't really actually take good trades because you're really just gambling because you have no idea which way the trend is. So there's three types of market trends. There's an upward, downward, and then sideways trend. It's very important that for me personally, I only trade upward or downward trends. I don't personally like to trade sideways action. And this is just because for me, there's bigger moves in upward and downward trends based on my current strategy. Now, there are some people that like to trade sideways action. If you're one of those people, right, that's okay. Everyone has a different strategy and personality. And for trading, you really need to know what works for you the best. For me personally, an upward and downward trend works the best because I like to capture bigger moves while I'm trading with higher risk to reward trades. With an upward and downward trend, you also will notice that when you break a structure or a pattern, you'll get a much bigger move than just the sideways action. However, I also know traders and some of my close friends and students that just trade sideways action and they're profitable because they capture those little moves with bigger size. So really, when we understand these three market trends, you need to understand what works best for you and trade that. For me, like I said, it's upward and downwards, but I prefer an uptrend if I can get one. How to identify trends. Now, this is super important because a lot of people don't actually understand how to identify a trend. There's three ways to identify a trend: upward, sideways, or downwards, right? And what you're really looking for is on an upward trend, you want a low and then a high, of course. But while we're going up in that trend, you want to create those higher lows. So let's say this is the low, we make a new high. This will be called the higher high. And then we come back into a low. Now this low needs to be higher than the previous low. Therefore, we can label it as a higher low and show that the trend is to the upwards side. After this, you want to break that previous higher high for a new high. Before making a new low or anything like that, we need to make a new higher high and then come back into the higher low and continue on. For sideways action, we really just have that consolidation. Now in this consolidation, if you guys have watched my last video, this can also be identified as accumulation. Okay. And accumulation is really something that occurs when a stock is in a range and buyers think that the price is in balance. Now, for me, like I said, I don't really like to trade in this type of market. However, this is just a range market and you just really want to trade those support and resistance levels. And then finally, for a downward trend, you're going to look for a high and then a new low. When the stock pulls back into that high, you want to ensure that it doesn't get all the way up to that high and it actually just creates a lower high based off of that previous high. And it keeps going down, essentially just the opposite of the uptrend on the bearish side. And of course, we just keep making those lower highs and lower lows all the way down to a new pivot low. So that's how you identify trend. We're looking at trends. However, it's really important to mention the multiple time frame analysis. This is where a lot of traders will get faked out and actually have not the greatest trades. And the reason they don't understand why they just lost a trade is because they don't understand time frame analysis. So on the 4-hour time frame, we can see that this stock has a bullish pattern, right? We see those higher highs being put in and we see the higher lows being put in. Therefore, this is a bullish time frame. Okay. Unfortunately, what happens is when we do pull back on the 4-hour time frame right here, as we can see, we're pulling back, but on the higher time frame rate, this is a healthy pullback for the upside. If you don't look at the higher time frame and you're just trading the lower time frame, what's going to happen is you're going to see a lower low and lower highs being put in, and you're going to assume that this is going to be a bearish setup. So let's say you enter into this new low, right? You just bought that break of structure to that new low. Unfortunately, what's going to happen is you're going to get stopped out by an impulsive move to the upside, and then you're going to be confused on why that happened. The reason that happened is because you didn't look at the higher time frame. So you always want to look at the higher time frames when you're identifying market structure and market trend. Now, for me personally, I like to look at higher time frames the night before or in the morning. This is because I like to mark out the 4-hour, the daily, the 1-hour, whatever it may be, but then I only trade on the 1 minute or 5 minute time frame, right? So that's why for me, I'll look at the higher time frames the day before or in the morning of, and that way I won't be in for any surprises if we do get an impulsive move because we broke that 4-hour level. I already know that I was expecting that move. Change of character versus break of structure. A lot of people do get faked out on this, and this is a very important slide to take notes on. What is a change of character, and then what is a break of structure? When we're looking at break of structure, a break of structure is a continuation of the trend when price makes a new higher high in an upward or a lower low in a downtrend. So what are we talking about? As we can see here, we see break of structure, right? This is a downtrend and we have this previous low. When we break that low, that's a break of structure continuing the trend to the downside. Once again, we have a new low being put in, we make a new lower high, and then when we come back into that low, we break structure again, showing that the trend is still to the downside. Now, a change of character is when the price breaks the previously established pattern and is a sign of a potential reversal. So when we're looking at this trade, once again, a change of character, as we can see here, occurs on this previous lower high. So we're breaking structure to the downside and then we create this lower high. Now, when we come back, we don't actually make another lower high. We make a higher high because we break this previous lower high. This is a change of character, okay? And what this indicates is the market might be reversing here, and we need to be careful because if the market does reverse when we come back into the zone and it acts as demand, it's going to break through these levels, and a change of character signals and tells us that, hey, the market may be changing from bearish to bullish or bullish to bearish. So make sure you understand that when you are trading these change of characters, right? And vice versa for the bearish side, right? We see bullish action all the way through, and then we see a change of character on that previous higher low, and then we break that higher low, showing that this could be a bearish sign of a reversal. We come back into our supply and we break all the way through down to new lows. So that's the difference between a change of character and a break of market structure. So what are the 3 rules for market structure, and what do I look for before entering a trade? The number one thing I'm looking for is which way is the market trending. Are we upward, sideways, or downward trending? That's very important when you're looking for trades, because if you don't understand which way the market is trending, you're not going to have a high probability trade. Number 2, I like to look at where the change of character is and where is a break of structure, because if I can enter into a trade, I'm going to put my stop loss at a break of structure or a change of character, and I'm going to put my profit target at a change of character or a break of structure. So you really need to understand where this is to help you get those higher risk to reward trades and understand where to put your stop loss, where to put your profit target, where to enter and where to exit. And then finally, has liquidity been taken? Price action. And we're going to talk more about that when we get into some real examples, because where liquidity has been taken, you can see through price action. And if you guys have seen my previous videos, I talk about price action a lot, and we're going to be talking more about that in the upcoming example. So now that we understand what market structure is, how to identify trends, and how to look at liquidity, let's go look at a real example. All right, so here we are on our first example on SPY, and here we can see a clear uptrend so far on the stock. What we want the stock to do is show us a new higher low being put in. In this example here, we see that higher low being put in right here. And then here is the previous high that we have on the stock. Now, what these 2 levels signify is if we break below this higher low, this might be a change of character to the downside on the stock. If we break above this previous high, this is a break of structure continuing the trend of the stock. All right, I hope you guys understand what I mean there. A change of character occurs when the stock might indicate a reversal. A break of structure indicates when a stock is going to continue in its trend. But this higher low is going to identify that if we do break below that, we might look for a bearish entry. But if we break above this previous high, we will be looking for a long entry. So let's keep playing out this trade. As we can see here as well, we're really just getting sideways action into this level, right? Between these 2 levels, we're getting sideways action. We couldn't break above here either. And right here, we actually just broke that change of character, right? We just had a change of character from this previous higher low. We just signified that we're actually breaking to the downside, right? And this is our first sign. This isn't a guarantee. This is our first sign that, hey, we might want to look for short entries rather than longs, because sellers are more aggressive near the previous higher low and buyers couldn't step in, and we broke and actually closed the candle below that, right? So this is where our new low is being put in from the previous higher low, and this signifies that change in character. I also want to mention that from our previous slides, if you guys remember, this is an uptrend and then we get sideways action, right? This is just like the slide I showed you guys. And now what we want to see is break of that change of character and then a move all the way down to low of day. So let's keep playing out this trade. So far, right, we are looking and aiming for that short position now, but we have no entry criteria hit just yet. Here we are coming back near that low. As we can see, we're consolidating near that low, showing that buyers and sellers are trying to see who is going to overpower this key level. And as we can see, that was the sellers overpowering right there. And now what we want is the stock to come all the way down to that low of day. All right, so we want the stock to come all the way down to this low of day. And that'll really confirm for us that the stock is in a downtrend. Now, as you guys know, I'm not a breakout trader, I'm a retest trader. So what I would be looking for in this scenario here is for the stock to come all the way down from here to low of day, right? Just make the new low of day. And then I would like a retest of this previous low, right? Look at how many touches it's got. 1, 2, 3, 4 touches. And then it broke. And this is a great level for us to enter for a high probability trade, because we can see that if we do come back into this level, we are still in a downtrend. And this brings us to the 3 qualifications that we need to enter. Number 1, we need to understand which way is market structure breaking. We can see that we actually created a high here, a lower high, and a lower high here as well. Along with this, what we can also see is when we were making those highs on those equal highs, we were actually using sell side liquidity all the way through these 2 levels, right? As we can see, these 2 levels, we use sell side liquidity and we actually couldn't get above these levels. And that's what these wicks are indicating as well, right? So when we come back down, right, where's the break of structure and where's change of character? So when we're looking at this zone, we can actually make this a supply zone as well, just like so. And a break of structure would occur when we break this previous higher low or this pivot level here, right? So we're going to get rid of this, and our stop loss, if we were to enter this trade, would be a little bit above these previous candles, just like so. And this would be our stop loss a little bit above our previous supply zone, and our profit target would be at this previous low. All right, so this is what I would want for a trade. It uses 2 out of the 3 signs so far. And what we want in this level is weak price action to confirm all 3 rules of market structure. So let's keep playing out this trade. There's the new low being put in on the stock, right? Just like we wanted. And what we want is the stock to come back here now to show weak price action. And here we see that weak price action, right? This candlestick signifies that buyers were trying to bring the stock up. Sellers came in and closed the stock red and created a big wick near our level and zone. And this is an inverted hammer candle, or you can also call it a shooting star candle. And we want to enter the stock here because this is going to give us the highest risk to reward. And this is the best trade to enter because we know we're in a clear downtrend. So how would we enter this trade? We would enter this trade here looking for that new low of day, right? So our new low of day occurs right here. That's where our new low of day is. And our stop loss is going to be a little bit above that previous higher low. And then this pivot level or consolidation level here as well. Okay, so this is going to give us a risk to reward of 2.49. Let's enter into the trade here and let's see exactly how this trade works out. And just like that, right, we're going to flatten out that full position for a $1,150 trade based off of clear market structure, that clear low and the clear break of structure as well, along with identifying liquidity within this trade. So I hope this video helped you understand market structure and identifying liquidity. If it did, make sure to leave a like and subscribe to the channel. Make sure to follow me on Instagram and Twitter, and I'll see you guys next week with a brand new video.